Hi, everyone. Let's have a great week. How's everyone doing? Hope everyone had a good weekend. Good morning, Brock, Kevin. Hi, Didier. How are you? Hugo, Arena, and the rest of my trading warrior brothers and sisters. Who's ready to have a good week? Give me a Y. Okay. Few people. Hi, Ren. Okay. So then you're going to have to be patient. Who's ready to be patient? Ready to be patient. Okay, Georgie, you can't be patient. All right. If you watch Blake's week ahead video, good for you, Paul. That's discipline. He was expecting one more decline before we get some type of rally back, which has happened. My personal view is what happened in the dollar last week was significant. Um, if you don't have a position on from Thursday, getting back over 90.40 was big. We talked about the 78.6 retracement. Um, I'm going to have to be patient with you guys. Hello, Sinatra, because I'm not going to chase dollar strength up here. I guess if it goes without me. But I'm going to sit back and wait for some dollar weakness. I believe that's a play. Maybe we pull back towards 90.50. 90.40 was a critical area, but I'm looking to buy a break in the dollar. I actually think that we're going to have quite a short squeeze in the dollar. You could pick your poison. Blake showed what happened in Aussie at that key fib extension and the negative weeks that we have. When you have a week like this, that's a pretty negative week up there. Outside week, key reversal up there. But, I can't sell 180 pip, almost 200 pip decline, but I could be interested maybe back up here. All right. Canada right now, I think a lot of people call this a false breakout because we got above the wedge that we were talking about last week, and now we have an inside day. I don't think we're going to make new lows. I'd love to buy a break around 126 in that ballpark. So I guess you could say I'm bullish a dollar after last week, but I'm going to be patient and look for um, dollar weakness to go ahead and position myself. I think there's so many dollar bears out there that they could be squeezed quite dramatically over the coming weeks and months. Just some targets I have in mind along the way is 118 being one target for the euro. But I do believe before we have a major top in the dollar after this rally terminates, that we'll actually see 115, maybe a little bit under that handle for long-term positioning in the euro. So this is an area I've been looking for a while after this breakout. I know there's some people still saying this is bullish, and it could be, but we're going to have to take out Friday's high for that to be. Okay. And Mexican peso, USD MEX held up real well, not giving much back. I'd be interested, back down here if it happened. 2032. Oil's trying to negate the sell-off that we had yesterday, Friday here. Maybe it won't. We get an ABC up here without it making a new high. And, the market's trying to celebrate, that we're going to move towards debating the rescue package in the Senate. I just want you to notice the difference between this low last Monday when we had this to the off number, and then we kind of double bottom, took it out. look at how we're not going anywhere. We got from here to here in almost the same amount of candles, and all we've been able to do is hold here and I believe consolidate these losses. Um, the off number this week is up at 3906, which is near this moving average up here. I'm thinking maybe we just take out some of these stops over 60. He's looking to sell a rip in the S&Ps. I know a lot of people think that this is just a 4 and we're going to new highs. I'm willing to speculate against it sometime this week. Speaking of oil, we have Anas El-Haji with us today, and this is his bailiwick oil, and he was constructive $20 ago in our last interview. I'm going to be asking him if he thinks there are going to be any major changes in the relationship between the Biden administration and Saudi Arabia compared to the Trump administration since President Biden released that report on the prince, but no teeth to it, just words, no sanctions or anything. So, kind of a half measure, in my opinion. Why bring it up if you're not going to sanction the guy? I can't figure out today's politics at all, either party. So um, I just watch with not amusement, amazement. So that's some of the things I see today. I also, one last thing, I think that this right here was a false breakdown in the bond market. Check it out. I think I tweeted it. Look at that. So we took out the April low. This is a COVID low in the TLT, and then spiked after we took out the stops. And I think there's more left in the bond market. And part of it might be risk off and a stronger dollar. So, don't jump on the higher yield bandwagon now. Up here, yeah. Now, no. Same with 10-year yield, right? Down here, yeah. Even up here on the breakout. So I think we could pull back towards, correct this advance, maybe trade 80, 90, one even. And normally that would be somewhat bearish on US dollar yen, but the yen's just showing a little bit too much strength for me to want to do anything. And good morning, Blake. I enjoyed listening to your week ahead video. You really do a good job of prepping people for the week ahead.
Oh, thank you very much, Coach. How you doing this morning?
Pretty good, buddy. Ready for another week?
Yeah, you were just saying that you were you would speculate and take a counter trend trade, or if somebody, if they tried to take the market up, you would be selling into that strength. And you know what? I'm with you. I feel the exact same way this week. So
what did you notice, like from last Monday's spike low, how it really recovered, and then we got back down to the same levels, Blake, and all we've been able to do is hold. We've had rallies, but to me it smacks of consolidation before the next wave down.
Yeah, well, if you can you see my screen, Forex Analytics screen?
We got it.
I mean, I have to take into account, and I think we all have to take into account the big moves that happened last week. Grega or any Elliott wave person would call that, very impulsive, right?
Yeah.
So that move last week, no matter what you're looking at, I just happen to have the Aussie right here, but if you look at just the moves that we saw last week, I do think that created a big push of momentum in that general direction. So, when you have like the dollar index, for example, that had this huge hammer, this weekly hammer, I guess I should pull it up really quick, just and this is how I feel, what I think the dollar is going to do over the next couple of days. With this big hammer, I think you got to play into it, especially if you're talking currencies. So what does that mean in currencies? Well, shorting the euro, selling the Aussie. Last night I sold the Aussie at 77.55. It was, a family movie night, or actually I should take that back. It was actually my son and I watching Jack Ryan, but we call it like family movie night. It just happened to be, I try to, watch some, shows with the kids, especially, I guess it has been this last year during COVID, but anyway, that's another story. But I sold the Aussie at like 55, I think, last night, and I covered it up this morning when it dropped down in the mid 20s. And I'll probably continue to do that. I'm going to be looking for, in the case of the Aussie dollar should probably just focus on the most right now. I really believe that we're building a bear flag for the next leg lower. I think we'd be really lucky if we saw 80 cents again in the Aussie dollar. I really don't believe that 80 cents is coming, not in this, this cycle that we've been. I don't think we're going to see 80 cents again. I think we're going to eventually break 80 cents, maybe over the course of the next 6 months. But if I had to guess, the way the Aussie is going to trade is going to be something like this over the course of the next several months. And so that means that on this move, what we're currently seeing right now, if we can get a move back above 78 cents, I'd be more interested in selling up there. It's kind of like what you were just saying, Dale, about the markets, right? Yeah. If you can get a rally in the S&P back up, like in this case, maybe back up towards 3,900, that's going to be an opportunity to be selling up there, right?
Yep. It's kind of going to be across the board correction in the market, accompanied by or led by a strong dollar. So, that's, and I think this could last for many weeks.
Yeah. Yeah. And I agree with you. I totally agree with you. And, I'm not in the camp that, I'm not in the doom and gloom camp that, stocks are going, back down to, 2000. Although, I mean, at this stage in the game, there's not a lot that would surprise me, and I'm sure you feel the same way after, more than 3 decades in the market. You're like, okay, well, whatever the market throws at me, it's not going to be it's not going to surprise me.
One of my new Pinkertisms is remember anything and everything can happen.
No, I 100% agree with that.
Anything and everything. Be ready for it.
I'm done being shocked in the market. I feel like I've seen it all now.
Once crude went negative, that was it.
That was it. That
was it, like, man.
You can't throw me for a loop now. But no, but seriously, I look at the S&P and I really think that we are going to correct. We're probably going to head anywhere between 3,600 and 3,000. I think that's going to be where we're going over time, in the next, call it 6 months to a year.
I like your bottom number. Yeah. And that would just be a regular garden variety, 15% or so correction.
Yeah. And it's not going to be, what's going to be a driver of this is, what kind of infrastructure spending do we get this, later in the year? Are we going to get the full 1.9 trillion right now? And,
no.
how many COVID variants are there going to be that really affect
10 years worth?
Well, I just don't, I wish I had the answers to those questions, but I'm
some guy who's on CNN all the time, Harvard, I think he's from, kind of wears almost like a Nehru jacket. He just wrote a book called Variance, and he's one of the most pessimistic guys out there, and said we'll be battling the variants for a decade.
Ugh,
I know,
but yet I don't think that's. I don't disagree. How I firmly believe that and this is just me, and it doesn't mean it's true. It's just my belief. My belief is that we're going to be battling this for a long time, and it's going to be like a pneumonia. You're going to, I mean, my wife
Yeah.
had pneumonia. She went to the hospital, probably another week later with pneumonia, she would have died, and, she got treatment, she got therapy. She was better in a few weeks.
Yeah.
COVID's probably going to be like that. We're probably going to have good therapies and,
Yeah.
good, and yeah, if you don't catch it early enough, you could die. It's just, it's going to be the way it is, and you're like, oh crap, I lost my sense of taste. We'll go to the hospital. You know what I
Yeah.
mean? It's
Yeah.
like, oh my God, I've got really severe flu-like symptoms. Okay, go to the hospital because you're probably really sick, and they'll have some sort of therapeutics for you. And I'm sure we're just going to be dealing with it for years. But does that mean that you have to stop living your
Living?
life? Yeah.
No.
No. And I was talking to a friend of mine. She's a doctor in Northern Arizona. She's like, she's like, I want to say late 50s or so, late 50s. She's great woman. I've known her for years. And she's like, I really don't foresee a time in my life that I won't travel without a mask now. She goes, I enjoy not being sick. She's like, I enjoy not getting colds, and she's like, this is great. And she believes that we're going to be dealing with COVID for a long time too. But she's like, I'll wear a mask. I don't care. I don't get sick. Plus, you can't see me when I'm making faces at you. And I'm like, yeah, that's a good point. So anyway, so hey, looking at the S&P though, we've got this ascending wedge, and I think that's key. And that's what you see this green line. It's green for a reason. While we're above it, just be bullish, but bullish risk. We get below it, then you have to turn bearish. And that, you'll notice, it also coincides with, you can see the fibs here. It'll coincide with the 618 retracement, pretty dang close to. There we go. Which comes in around, let's just call it 3870. Oh, wait, 3770. Right? That's the 618. The bottom of that ascending wedge comes in around 3790. So this area right here, I think, is really key for risk. And we break through that, you got to start thinking, okay, what happens when that breaks? That's when you start thinking the dollar Mexican peso is going above 21. The Aussie dollar is probably going to drop below 76 cents or 77 cents, things like that. I think that's the way I'll be viewing the market. And what I'm hoping is going to happen this week, and then I'm going to turn it over. Well, we can talk to Stelios a little bit here. What I'm hoping happens is that we see a little bit of a continued bounce in risk, like Dale says. You get to sell into it, and eventually we break through. And that gives us a good, area, good risk reward place to be on the short side of risk. Does that mean it's going to happen? No. But, if it does, I'll be there waiting for it. So, Stelios, how you doing this morning? How are your book sales? Did you, no, I mean, I was asking Stelios before about his, his publisher, and, I know a bunch of people, probably bought books. We've had people in our chat room that have talked about, the truth in LIBOR, and what a great story, and it should be a Netflix movie and things like that. But I asked Stelios, I said, how are sales going? He's like, I don't know. Like, I'm like, doesn't the publisher tell you? Like, doesn't the publisher tell you, like, hey, your book's
I think they update me every 6 months or something like that. So that's the
what? Well, how about if you're like the next who does the Harry Potter? What's her name?
J.K. Rowling. Yeah.
Yeah. Why? How come you can't be the next J.K. Rowling? And then 6 months later, they're like, oh, by the way, you're a global bestseller book.
I guess they would tell me if it happened, and but I think that's relatively unlikely. But anyway, I don't mind. The main reason I wrote
I
it.
agree. It's very unlikely, actually. Yeah. But I'm just saying, you never know. And it's not because I don't think you're awesomeness. Anyway, but go ahead. What were you saying?
Thank you. No, I just said I was going to say I wrote. There were two reasons why I wrote it. One, because it was a healing process for me, and you finally can get closure after such a big injustice. It can eat away at you, and two, because I hope that maybe by reading the story, other people could get help and help themselves overcome their own issues or their own problems, whatever they are. But anyway, obviously, if it sells well and I make some money out of it, I'm not going to say no. But
Yeah.
that was anyway.
So we
Yeah.
got a lot going on. We got a lot going on this week. What's happening for today and the rest of the week? What should we be looking out for?
Well, early last week, when we started getting yields going higher and the markets were a bit jittery, I said nothing has changed for me on a macro level until we break a couple of pretty important levels. And one was 150 in 10-year, where you get a proper daily close above, convincingly, and then it continues. Or if we break below 3,800 in the S&P, again on a daily close. And well, look what happened. The S&P bounced from 38, what was it? Well, it reached the intraday
37.90-ish.
Yeah, exactly. And the yields got up to one. Obviously, they spiked for a few minutes on what looked like a stop hunt, but really they were around 150. So, with the stimulus bill being passed, this current wave of, let's say, uncertainty has passed for the short term. Maybe we get a few days of euphoria and we're going up again, but I don't think this is over. But I will need to see a proper break higher in yields, and more importantly, S&P 3,800 I think is the first level, and then we need to make lower lows. So 36.65, what was it, the previous low? If we break below there, I think then this could be something bigger. So for me, the big picture has not changed yet.
Let me ask you guys something. Do you think that, Biden's package is 1.9 and maybe it gets through at 1.5? Do you think 1.6? He's not going to get everything he wants. Do you think the market will be disappointed with 1.5?
Yes, I do. I personally do. I think
Okay.
the market will be very disappointed.
So maybe the market kind of, and they're talking about March 14th, they want to have a vote on it. So, I mean, they could whittle this thing away for a few weeks, right?
Yeah.
So,
Yeah, and that's I think that's the way we're looking at it. And I was just reading something a little bit earlier. Let me see if I can find it. But anyway, and that might be what causes the next the next move down to challenge some of these supports near 3,700 and below is because the market's not going to get what it is expecting and what's priced in, because right now we're priced in for perfection, aren't we?
Yeah.
What do you think, Stel?
Yeah, I think in the short term it's going to get disappointed if we get less, but I think we can all agree that this is not the end of stimulus, and the Fed's there. They're going to do more and more and more, and however more is needed. They shouldn't, but I think that's what they're going to do. So, we will need some kind of trigger to actually get a proper move. What will that be? I think it's probably going to be yields, but
let's talk about that really quick. There's a lot of smart guys out there and gals. But I want to say this: a lot of people believe that yields are going to turn lower from here.
Yeah.
So we don't get that rise in yields, which would scare a lot of people that we've got this inflationary environment. But what happens? And I want to ask you guys this question: is it a good thing if yields actually drop and we head back down below 1%? Is that a good thing, or is that a holy crap? This market or this economy is really weak. How do you feel about that? What do you guys think?
It's a scare. It'll be a scare, and if you watch the banks, XLF, the banks won't like this, because they loved yields going up. And I actually heard something, and I want to turn it over to Stel, that it was actually a policy error by Powell when people were asking him about rising yields on the back end of treasuries. And he said, oh, no, it's okay. It shows growth and where people are saying, no, that may be a mistake, that he said he was going to like tolerate it instead of coming in and pushing yields back down. He said it's no big deal. That may be a policy error.
Huh. What do you
Maybe.
think, Stel?
I think your question, is it good? It depends who for. Lower yields are bad for banks. They're great
Good
for
point.
stocks, for
Growth.
risk assets. So I think personally, the Fed and central banks should let markets price risk accordingly. You can't have junk bonds yielding 4%. You just can't. So risk should be priced accordingly, like I said, but they're not letting it. So at some point, the market's going to get away from them because they can't do this forever. So are they going to push yields again, lower yield curve control, and they're going to start doing stuff to the 30-year yield point and everything? Well, if they start doing that, then they're just going to delay the inevitable, and it's going to come with greater force. So theoretically, they should just let everything slowly come to some kind of normality, whatever normality is, but they don't want to.
Well, depending on where you guys fall on the debate for, what yields are going to do, and maybe, and really quick, because I know Dale's got an interview coming in. Stelios, if you don't mind, just, and both you guys, take a look at some of the questions and see if we have any questions that we can address before we go off into our interview. One of the trades that I think that you guys got to be watching, or pairs that you got to be watching, and just so you guys know, I've been playing the dollar Swiss on the long side the last couple of days, but the dollar Swiss is approaching, and let me explain to you a reason why. First of all, we took out this multi-month downtrend line, and when we did that and we went above 20 or 90 and a quarter, I played it long to 90. I think I played it to 90.80, like up to the 127% extension last week. And this morning I'm looking at the dollar Swiss, and here we are nearing the 161% extension. But more importantly, we're heading towards the breakdown point. This is a key breakdown point at 92 cents. You can see it right here. We are at 91.45 and 92 cents, which is only 50 pips away, is key. Now, if you are in I think yields are going higher, and we're going to see the 10-year yield at 2%. If you're in that camp, then you have to be bullish the dollar Swiss. Now, if you're in the camp that says, yields are going to, the 10-year is going to go back below 1% because of, slow growth reasons and COVID and blah, blah, blah. Well, then you should be looking at this as a short. I think this is going to be one of the more yield sensitive currencies to play, is the dollar Swiss. So I think you should be keeping it on your radar. And it's not something that I trade a lot. I traded it last week, and it probably was the first time I've traded it in, probably a couple months. So it's not something I trade a lot. I think it's going to be that we're at an inflection point for the currency. So
yeah, I agree. That's a major point.
Something to keep. And again, I think it coincides with that 1.5% really important 10-year yield. And again, I'm not going to sit here and tell you what's right. I mean, personally, I think yields are going back down. I mean, that's my own personal opinion, but that doesn't mean I'm right. I wouldn't be, as Dale said, you just can't be surprised. And you have to expect the unexpected. You just, hey, maybe yields, spike up to 3% on the 10-year, and we go, what the hell just happened there? And, here we are, making a run for, 2.5%, 3%. And, that dollar Swiss is probably going to be trading closer to 94, 95 cents in a situation like that.
We have a couple of people mentioning oil on the chat, and, what happens with oil at 60 and copper rallying, commodities rallying, and yields going back down to 1%. That doesn't it doesn't add up. It's with commodities going higher, and like I think Ronit it was who wrote, batteries using these the components for batteries going up, and pretty much components for everything going up. You can't keep yields low. I mean, you're going to get inflation eventually coming through.
Either that, or these commodities are all mispriced, and which could be the case. I mean, we could see, maybe people start saying, hey, why is crude all the way up here? And, it pulls back towards 50 or maybe the high 40s. And, you see copper, instead of trading up here at, 415, we trade back towards 350.
Yeah,
and yields drop. I mean,
yeah.
Something's not adding up. I agree with that.
Yeah, the
You know.
reflation narrative, I'd say, is pretty much under pressure. We had that gold breakdown last week, and except for it's been talked about for a long time. I mean, the grains have exploded. We've already had a lot of reflation, haven't we, since COVID, with everything going reflating after deflating. So why, we're not talking about the balloon popping and collapsing, but why not? There could be a period of time where some of the air comes out of the balloon for a while before it blows back up.
There definitely could be, and so I think this is going to be. And here's the great thing, guys, is that we are going to be seeing a lot of two-way action. I see traders in my chat room trading on both sides now, and which is awesome. When people are in the, you look at here's the Forex Analytics chat room, and you got people, just trading on both sides of the of the market, which is awesome. That's what we need. We need, this two-way price action. And so, Dale, I think I'll speak on behalf of Stelios and myself. I know you've got your interview coming up right now, but before I let you guys go, I just want to say, if you haven't tried out Forex Analytics, please do so. Go to the Forex Analytics sponsored page. What's that?
Anas just showed up.
Okay, you did see him.
Yeah.
Open a Pepperstone account if you're outside of the U.S. and Canada, because then you can get Forex Analytics for free. If you're in the United States or in Canada, reach out to down at the very bottom here. It says email us at brokers@forexanalytics.com. That'll connect you actually to Forest Park FX, and they'll help you find like the best broker that fits your needs. And they're, we love Forest Park FX because they're very, they're like a boutique, they'll actually ask you, hey, what kind of trader are you? This is going to be the best broker for your, based on what you're trying to do.
How about this for a tagline for them, Blake? If you can't see the forest from the trees, have your picnic at Forest Park FX.
You're a poet, man. You're a poet.
Huh?
That is, you're like the king of cheese and the king of dad jokes. I love it. I'm taking from you because I'm gonna take my kids.
Yeah.
My kids make fun of me all the time because I just throw out dad jokes all the time, and they think
it's okay. Welcome to my era, Blake.
Ingmar wrote in, I got a Pepperstone account a month ago, and I have only good experience with it so far. And you know what? The coolest thing about Pepperstone is they are very, they have, premium client assistance. So it's like they really help out their, especially if you're an active trader, like most of us are, you'll fall into their premium account services, and then they start talking to you and really taking care of you. Anyway, all right, hey, have a great interview, guys.
Thank you.
Yeah, if you're a Forex Analytics subscriber, we'll see you in 45 minutes for the bias chart analysis when we go through all the major currencies and all the major instruments. So we'll see you guys over there in 45 minutes. The rest of you have a great day, and we'll catch you tomorrow.
Thank you, Blake. Good hunting.
Thanks,
Anas.
too.
Good morning.
Welcome back to Face, my friend. How are you?
Thank you. Very good, very well.
All right.
After a week of hell in Texas, we are fine.
Oh, that's right. Yeah, you're down there. Okay, so yeah.
I'm sorry, I have to jump in here. I feel bad for you guys in Dallas. I lived in Old Town and then McKinney for 13 years, and before moving back home. And boy, you guys really got hit there.
Big time.
Oh.
In fact, I mean, one of the things that just kind of one of the signs of times that I never ever seen chicken standing on one leg until that week.
That's how they were getting around.
That's
Hopping?
how cold it was. They couldn't even put both feet on the ground.
Oh my goodness, yes. And so, I guess that might be a little bit of a test case in case some of our enemies are thinking about using an EMP to take down the whole grid of the country. Yeah, I mean, you could set back civilization 100 years without power, can't you, Nas? Maybe that's why you got, it's something that you had such a great interest in, and I want to acknowledge that I remember talking to you after we had that break to 33 and we started heading up, and you were very constructive on the price at least $20 ago. Are you going to show anything on your screen?
Yeah, I'm
Uh,
trying
why-
to get to this tweet.
Share screen? There you
Let's
go.
see. No, this is not. Sorry, this is
Oh,
not
well,
it.
you're sharing your screen.
All right, I need to take that off, and I hope I am not. Okay.
So you just do a new share or change the,
Yeah, for some reason I am not getting that screen. All
well,
right,
you
stop
could,
sharing.
you
Okay.
could stop sharing and
Yes,
pick the right one.
it's stopped right now, right?
Yes.
Okay. So I'm going to close those files in just a second here. And I am trying to get to this tweet, this one here. Hopefully I can find it easily. Anyway, it is an article that just been published in World Oil Magazine. And it's going to be posted, the link is going to be posted most likely today.
Okay.
And the
So you
article,
can't find it to share it, right?
well, it is in my account. While we are talking, I will get it. But the whole idea here is, while everyone is talking about demand and the recovery in demand and what's going to happen, and some people are very excited about oil prices. Let me, while I'm looking for that article, let me state the following. Many people are mentioning $100 oil. There is no way we are going to get to $100 oil. And the reason why, because for the last 140 years, we did not have this phenomenon that we talked about last time, which is China becoming what we call in economics oligopsony, where they are a major buyer who affect the market structure, and they can control the price ceiling. They can literally set a ceiling for the price in the world. So if Saudi Arabia and OPEC can literally affect low prices and increase them, those guys can put a lid on it. And what we are seeing now is two things. First of all, the second quarter demand, usually global demand, declines all the time. But now we are seeing a couple of things at the same time, and that's really dangerous for oil prices at this stage. First of all, OPEC is going to increase production, or OPEC plus. At the same time, China's oil demand is not growing like some people are expecting. Their imports are declining. The backwardation in prices does not encourage people to store oil. So it is very clear that demand is not going to be as strong, and it's very hard to see prices going up. But let's say that for some reason they reach 70 or 75 or even 80. China is going to use its strategic petroleum reserves to literally prevent this from happening. So they are going to use massive amount, probably 50, 100, 150
So
million.
they'll release reserves to cap it.
Yes. Yes.
Okay.
And
kind of like our SPR.
correct. The only difference is, in the case of the US SPR, we have regulations that prevent the US president from releasing the SPR to manipulate prices. Well, they don't have those conditions. And therefore, they can literally do whatever they want and make things really difficult for OPEC. I'm trying to share that slide right now.
Okay. All right. Then let me stop sharing.
So they are going to release oil from the SPR and cap prices within that limit. So it's very unlikely that we will have $100 oil. But the second quarter is going to be really a problem for OPEC because of China. and it's very hard to see prices rising much above current current levels.
All right, go ahead and try and share it now.
All right.
Anas.
Hopefully, will you allow me, please?
Yes.
Okay.
I have. So it's a green box, share screen.
It says because host stopped you, so I need permission from you. All right. Hopefully, I can get to it right now. All right, here it is.
Okay.
All right. So this is, you see the World Oil
Yeah.
First page. Okay. So
Got
this is
it.
going to be, it is on my Twitter account, but that's the hard copy. I think they are going to post the link today. There are two main ideas in it. One of them is about the impact of electric vehicles, but the most important one is OPEC Plus and its members should not worry about electric vehicles at this time and their impact on the oil market. What they should worry about is about the impact of work from home, the new trend that is getting more pronounced worldwide. And that's going to affect transportation demand. I mean, we grew up talking all the time about the rush hour in the morning and the rush hour in the evening, because people drive to work, come back from work, and at the same time, we have those major congestions where people get stuck in congestion and they consume a lot of gasoline and diesel, pollution, CO2, etc.
Well, we still have that, Anas.
Yes, but it's not going to be as the otherwise, which means that everyone going back to work.
So who
it's
are
way
these
less.
people jamming up the I-5 here in San Diego? Are they,
Well,
they
there are
all going
still-
shopping? Huh?
No, but the idea here is it will be worse if everyone is not working from home.
Oh, okay.
Okay.
Well, thank
So
God
I did an
that-
estimation here.
I
did
don't know
some
what's
work on
worse than a parking lot on a freeway, but I guess it could be worse.
So
Go
I
ahead.
did some. I looked at this trend and I used some references in the article, just kind of to confirm the point. And I did some work on this, and I found out that if this trend is global, we already lost about 4.5 million barrels of oil demand
Okay.
because of it. And will this continue? Well, we have enough evidence to show that some companies eliminated their headquarters completely, and some companies retrenched. For example, instead of having 4 floors in a building, now
Yeah.
they have only 1 floor. And
Is
if they
that
have
4.5 million barrels, Anas, a month?
a day,
A
yes,
day. Okay.
a day.
Got it.
So what that
Alright.
means is, if current oil demand is 93 million barrels a day, and the global oil demand in 2019 was 100, we are short 7. Probably 3 to 4 of them are not coming back because of that.
Okay. That's a
And
big deal.
it is. And the issue here is we are already seeing all kind of movements from the companies. On the other side, it seems that the legal framework in various countries, including the United States, is not set up for that. So what if someone working at home and they have a toy for their 2-year-old child and they stepped on it in their office and got hurt? Who is liable in this case? This is just an example. It is at work, the guy is working, but the toy is his son's toy.
And he's at home.
And he's at home, but he is officially working.
Okay.
And
You would
they are-
think it would be, oh, okay, so, rational sense would say it's the father's responsibility, but knowing the way laws are so convoluted that he could actually sue the company and make them liable because he was working for them?
we don't know. See, I'm just raising those
Oh,
issues. For example, I mean,
okay.
if someone sitting in front of his computer had a heart attack and dies,
Yeah.
okay? If he's
That's
at the
my-
company, we know.
I
we know
planned my retirement that way.
so if this person
Go ahead, buddy.
if this person dies at work, basically it has different legal consequences from dying at home.
Yeah.
So in a sense, we do have those legal issues. We don't know how they are going to work out, and we do have all the issues related to technologies, etc. So there are some counter arguments, but the trend is very clear that more people are working from home than ever. And it is very clear legally that contractors have no problem working from home, while full-time employees, probably there will be some legal issues in this case. So this is going to lower oil demand, and this demand that is killed forever. We cannot retrieve that demand.
Okay.
The other trend we are seeing is some companies are, the bigger companies, thinking about creating those resort communities. So instead of just like the resorts around the world, but it will be owned by the company, and people will be living inside those resorts.
Huh.
So it will be nice living, but there is no cars, and they have to walk to work. And if they need to go out, they have to go outside the resort to drive a car. So in this case, the companies can claim to be green, etc. So in a sense, we are seeing this development in the transportation sector that is faster than and has a larger impact than electric vehicles.
What a great insight that a lot of people aren't really bringing
Correct.
up.
So it
You're
is in
right.
the
Everyone's talking EV as being the bearish factor and the stay at home. You know what they say now is it takes I don't know, like 4 to 6 weeks for something to become a habit, and
Yes.
this has been over a year.
Yes.
So it's more than a habit now. It's ingrained, isn't it? A lot of people
Absolutely.
won't want to go back to an office.
Not only that, if you look at the benefits, again, some of those are mentioned in this short article. If you, in some areas, I mean, you are in an area right now where some people commute is 1 hour and a half in the morning and 1 hour and a half in the
Yeah.
evening.
Yeah.
You are
It
talking
would
about
kill
3
me.
hours, 3 hours gained, either in terms of work or social happiness or whatever you
Yeah.
want to call it. Just from that.
I like my commute, one bedroom to another, and which bathrobe should I wear today?
Well, this is almost like mine.
I know. So we've been doing this a long time. It's the rest of the world that's starting to see the advantages of being able to do
Correct.
it.
I'm not going to name, but I will give you an example. There is this government where I do training every year, and the cost of getting me there is in tens of thousands of dollars in terms of the hotel and the transportation and business class ticket and all that stuff. And
Right.
now they saved all of that.
Right. You just do it over Zoom now, huh?
Absolutely. They saved all of that. So in a sense, there are many benefits to the companies from it, and this is an immediate impact on oil demand. And therefore, I use the term oil demand trap.
Okay.
Why we call it a trap? A trap means that the oil demand is trapped and we cannot get it out of the trap because, by definition, it's not related to price and not related to income. Which means that if gasoline prices drop to 5 cents, those people are not going to get out.
Right.
And if airline tickets decline by 90%, they are not going to travel anyway because of fear of infection. If you double their income, if the government goes in and have this massive stimulus and give people money, some of those people are not going to react no matter what.
What a great point. You know, you always surprise me every time you come in with what your narrative is going to be when you come in. Because, you know, I had some questions that are completely unrelated to what your major thesis is about oil demand. So mine are more about supply. So how do you compare the relationship, and how do you think it's going to evolve? The same, differently, with the new Biden administration compared to Trump? You know, Biden put out the report saying that the prince was responsible, but no sanctions. So it almost seems like the same, because the Biden administration also recognizes the importance of the strategic relationship with Saudi Arabia, even though the prince, you know, may have been involved in an assassination of a journalist. What do you think is going to happen there? Because it is Saudi Arabia that, you know, kind of reinforced the dollar being the reserve currency by only accepting oil payments in dollars. Do you think that might change?
No, okay. Let's state out a couple of things, and I don't want to delve into politics because that's a
Okay.
dangerous slope. But
All right.
U.S. imports from Saudi Arabia are very small,
Okay.
very tiny, and
Okay.
we are talking about 300,000 barrels a day, which is 1/10 of our imports from Canada.
Okay.
And the reason why, because the Saudis cut production and they want to increase prices. So if they want to flood the market, really the Saudi weapon is not cutting production and increasing prices. The Saudi weapon basically is their nuclear bomb is to flood the market.
Okay.
And if they flood the market, they can literally destroy so many things in this action. We already seen it in March last year.
Yeah, we've seen it. How they knocked fracking out. Well, is fracking starting to come back with higher prices?
Yes, everything is coming back. I mean, we are not going to come back to the same level we've been at before the crisis this year, but we are seeing a really healthy recovery. One of the problems we have is we don't have enough money. We need more investment, and I think once other sectors suffer while oil is doing well, we will see investors coming back to the sector. But back to the point about the Saudis and the United States. One issue that is very clear here when it comes to Saudi Arabia and its oil supplies. Those guys been in this business doing this for over 45 years. And they went through several political crises with the United States, including the period when we had the embargo in 1973, in October 1973. They had their own problems with the Clinton administration. They had their own problems with the Obama administration, and that relationship survived all those all those issues. We had September 11th attack, as you recall,
Yeah.
with Saudis involved in it, and then the relationship survived.
Yes.
So it just kind of Biden part of the old system. Those guys are part of the old system. So it's very hard to see some major development coming out of what we heard.
Okay. How about the Biden administration wanting to go back to the deal
With Iran?
Yeah, and
Yes.
retaliating and taking out some targets in Syria at the same time.
I personally, and this is a personal opinion, I think the Syria issue is completely unrelated to Iran.
Okay.
And the deal. It's just a complete two different things. In a sense, we always have to look at the conflict in the Middle East as think about it like fighting or working in a building with 20 floors, and people are sitting having coffee on one and fighting on the other. So it's a kind of a multi-layer issue. But
Okay.
there is this misconception in the market that Iranians are increasing exports. And that
they're
is not the case. They have not increased their exports substantially. What happened is Iranians over time perfected their game of smuggling oil. And all what we saw since the loss of Trump in the election, that they knew that Biden is not going to enforce the Trump sanctions. So they just made those tankers visible. So
Okay.
making those tankers visible made some people think this is additional oil. It's not. It's been in the market for a long time. But will they increase production, let's say 6 months from now, and exports? Yes, because they've been working on it and they've been investing a lot in those wells, and they are going to increase in the future, but not now.
Okay, so let me ask you a little about price, and you're real right about this recent appreciation. You see any kind of ceiling here, at least temporarily, around this
Yes, because
$63 level or so?
yes, we have several factors which probably we are around the ceiling. One of them is the backwardation itself, the decline in global oil demand in the second quarter, what's happening in China today. We still have, if you really look at the world, we still have two different worlds. A world that is strangled by COVID-19 until today, and countries are still closed, and airports are still closed. while the other part in China and others in Asia are doing well.
Okay.
And that leads us to the meeting of OPEC that's coming on the 4th of March. It is very important for everyone in the business to understand this. OPEC members sell oil to different countries around the world. And it just happened regionally. If your customers are in Asia and the demand in Asia is going up, you want to increase production. You want to increase exports because you see the demand. And whatever consultants and others tell you, you say, look, I really don't care. If I have people knocking on my door want oil, and you are telling me, oh, there is no demand, whom am I going to believe? I'm going to believe the guy who's paying me money.
Exactly.
So those guys are going to say, look, I want to increase demand. So they go to the meeting and they want to increase demand. But other members, their market is in Europe and the United States. And they don't see the same growth. They don't see the same pressure. And instead of 15 people showing up at their door, there are only 2. So they want to either cut production or at least maintain current production. So the differences in OPEC meeting that we are going to see or we already saw are really, they have legs. Those who want to increase production because they see the demand for their crude, but the world is divided into 2 halves and depend on where your customers are.
Okay. So again, we have bifurcation in oil demand. We have bifurcation in the economy where some people are thriving, others are desperate. Bifurcation, in certain equity markets where you have outperformers. Well, everything's an outperformer there now. You have any idea if we do start to retrench where the floor would be on any pullback in WTI?
I mean, the floor is going to be high no matter what. We are not going to go back to the 30s.
Okay.
Remember, I think I had a floor of 37 or something like that.
Yeah.
Last time we talked. We are not going to go back. I mean, we are going to retrench from, or we might retrench from the 60s to the 50s, but that's it.
That's it. Okay.
What the Saudis did and others. And by the way, there is some talk about, it's been going on for several months now. People are talking about this Saudi Emirati dispute about oil policy, and the Emiratis want to crush the market and leave OPEC and all that stuff. And we've seen some writings and we've seen some people talking about it, etc. We already know this did not happen. And we are going to see more of it in the next few days. And I can say this without any reservation, that some of the articles that been published were promoted by a public relation firm and they were paid.
Okay. All right. So take it with a grain of salt. And your Twitter says keynote speaker, which we all understand. Also says woodworker. What was your last project?
Well, my last project was trying to make a wall of certain design around the staircase, which I never finished. Because there was one type of exotic wood that I used. It turns out that I am very allergic to.
Oh, God, how ironic. And wood prices, I mean, lumber prices have gone through the roof, probably becoming more of an expensive habit unless you just go to a junkyard for wood. Just buying wood. Wood has gone up more than oil.
I used to have, when I was in Ohio, one of my friends who's a professor of biology, I used to complain about the costly habit. And he always looked at me and said, it's cheaper than heroin.
Yeah. And better for your health.
Yeah.
So Anas, you knocked it out of the park again with surprising me. And that's certainly a lot of lost demand with the new paradigm that's developed out of COVID. I appreciate your time and coming here. Everyone stuck around to hear what you had to say, and look forward to rescheduling and getting you back here and see what happens late spring, early summer. So good hunting. Congratulations on your article and being published. You're a great resource for us here at FACE.
Thank you. Thank you. All have a great day.
All right, that's Anas El Haji. You could follow him there. There's his Twitter handle. It's his name, and great resource for really cutting through the BS and getting the facts about black gold. And that's a wrap for us. We'll see everyone tomorrow for Turnaround Tuesday. You're very welcome.
Thank you.
Thank you, Anas, once more, my trading warrior brother and woodworker. And we'll see everyone tomorrow. Don't just count your pips or barrels, count your blessings. Adios.